Good morning. My name is Bob Jablonski. I'm an enrolled agent, and my firm is Bob Jablonski and Associates. We're located in Richardson, Texas. Today, I want to talk to you a little bit about the 10-year IRS collection statute and why it's important. So, what is the 10-year IRS collection statute? Essentially, it says that the IRS has 10 years from the date of tax assessment to collect tax debt, and that after 10 years, the clock stops. The IRS must cease collection, and the debt becomes unenforceable. In effect, after 10 years, you do not owe that debt anymore to the IRS. They can't come after you, and they cannot, they cannot continue to enforce it. There are some actions that can be taken, typically by the taxpayer, that will delay that 10-year limit and when they put a hold on collection efforts. We'll talk about those in a bit. So how is the 10 years calculated? The clock starts on the date the tax is assessed, not filed. So today, typically, we e-file our returns. Either it's us as tax preparers that are e-filing a return on behalf of a taxpayer, or the taxpayer uses something such as TurboTax, and they electronically file it. And when that occurs, when an electronic tax return is accepted, typically, the date of assessment is the same date as the date that the return is filed. However, there are still returns that are paper filed, and there are instances when there is a substitute for a return is filed, and that's when the IRS says, okay, taxpayer, you haven't filed a return, please file your return. And the taxpayer does not file a return. Eventually, the IRS may file the return on behalf of the taxpayer. And so whenever that occurs, whenever the paper return occurs, once it's processed and accepted by the IRS, that's the date of assessment. So your 10 years begins with that date of assessment. What are some events that can delay that clock, that can extend it beyond 10 years? One of them is bankruptcy, and that would be the time that it's in bankruptcy plus 6 months. If you make an offer in compromise, the period of time at which that offer is being considered and the IRS is not collecting on the debt is extending that clock. A pending installment agreement. And what that means is you've made an installment agreement offer, and then at point A and then point B, the IRS accepts it. The period in time between when they accept it or deny it, that is a pending, that is a delay of the clock. Another example that's not on here is if you would appeal your tax debt, the IRS is not collecting on the tax debt during that time of appeal, that would add to the clock. So any event that delays the clock will be added to the 10 years by that amount of time. And you have to add up all those different events that delay the clock to come to the, to recalculate what the statute of limitations is on that debt. The purpose here is that it wouldn't be fair if the taxpayer could just keep filing bankruptcy or keep making offers that they know would never be accepted, and all of those things where they would just consistently delay the clock, and the IRS would run out of time without ever having an opportunity to collect the tax debt. So the purpose is kind of to make it fair, to give everyone that same 10-year clock. So why would that be important to you? And it's not a statute as I have up there, a statute. Why is the 10-year statute important? Well, as a taxpayer, it gives you a little bit of comfort knowing that tax debts are not forever. If you can't pay for it, if you're just in a position where you're just unable to pay that tax debt, it's not forever. There is an end date. You won't owe the government for generations. It lasts for 10 years, and then that tax debt is forgiven, basically. It's null and void. And it can be very important when you're making decisions on how to proceed. One example I gave here for you, let's say you want to make an offer in compromise. You want to make an offer for less than the full amount that you owe. Well, that might be a good idea if you just had the tax assessed, it was early in the process, and it was the best alternative for you. Then making an offer in compromise might be a great idea. However, you may think otherwise if you were 9 years and 10 months into since the date of assessment. The statute, the time is the clock's going to expire in 2 months, and you may take a different position. You may say, hey, I don't want to make an offer and compromise at this point. I'm going to let the clock expire, and I'm going to move forward. Another reason is, remember that every time you take these actions, these events occur, the clock is extended. You've delayed the time moving, and the 10-year clock has extended further. So if you continue to make offers and compromises that will never be accepted by the IRS, it may not be a wise move. You're not really delaying much, except you're just extending the amount of time that the IRS is going to have to collect from you. I hope that has helped you a little bit understanding what the 10-year statute of limitations is, how it can impact you, and just giving you some good information as to what to understand if you do have IRS tax debt. If we can help you, please give us a call, either with tax returns, audit issues, collection issues. Once again, my name is Bob Jablonski. I'm an enrolled agent with Bob Jablonski and Associates. We're outside of Richardson, Texas. My phone number is 972-821-1991. Thanks, and I hope you all have a great day.